Hi guys, Lee here. So we're going to go through how to get set up and day trade the US markets from the UK. I mean, I've been trading the market since 2004, and many years ago it was always a bit of a struggle to, actually get an account open. I'd have to send money over to the US. So what I'm going to do here, on this lesson, we're going to go through getting set up. I'm going to show you some options from a beginner's point of view, really, if you're wanting to learn to trade the US markets and day trade, especially the US markets from the UK. Okay, so we're going to dive into some basics to get started, and then we're going to look at some broker options and pricing, charting and scanning, and then we'll look at a strategy that we use here at Trading College. Okay, so don't forget the risk warning. Trading is risky. All right, so if you want to learn to trade the markets, of course, you've got to get the education, you've got to get yourself a broker, set your charts up, understand chart patterns, risk management, indicators, trading psychology, trading management, and swing or day trading the markets. Okay, so you need to understand that. This is a chart that I printed off back in 2006, trading Apple on the gap on the open, trading around $66, and Apple gapped up and then went on a run all the way up to $68.50, which was a couple of dollar move here, $2 move, which was really nice. It was a U reversal, I call it, a U reversal. So we gapped up, we come back down. It looks like I still use this strategy to this day. Comes back down, it does like a V or type of U sort of pattern, and then the market, explodes through that area. You get long with a breakout above the high, stop at the swing low here, and then it goes into this consolidation area and then breaks out. And that's, that's a dollar run. That's a nice dollar run. I was always going for dollar runs. That's what my mentor taught me back then. Get your dollar run, which is 100 points. Okay, so look at the advantages of trading US. If you're trading shares or the indices, I mean, yesterday the Dow Jones went on a 300-point move on the open yesterday afternoon, and we're talking here from a UK point of view. Okay, so this is if you're in the UK trading the markets, looking to trade the markets and get the education and understand more about it. You've got the 230 open here, the cash session. The Dow explodes 300 points. And then you look at the euro versus the US dollar, an hour afterwards, it's just going nowhere, 10-point move to the upside. So certainly the opportunities and the volatility inside the US markets, wherever you're trading the indices or individual stocks, is incredible. And there's no doubt about it, we've been in a massive bull market on the NASDAQ since 2009, and it's very much been driven by AI and the Magnificent Seven over the years. And it's only recently been driven by AI, but this bull market has been in an incredible bull market to trade. Now, inside one of the accounts here that I use, we'll go through the brokers and a couple of options I've got for you. The US Tech 100 is the NASDAQ, okay, and Wall Street is the Dow Jones Industrial Average. FTSE, obviously UK and German DAX here, obviously the German index here, and then you've got the S&P 500. I trade the NASDAQ and the Dow, okay. I don't particularly trade the S&P. You can, it's a great big market. And plenty of big whales trade in that market. It's a specialized market to trade, I would imagine. S&P, it's just the pricing for me. I prefer the pricing of the NASDAQ and the Dow, which is a good market to trade. They're both great markets, but you've got those options as well in there. And since 2009, you've got, I'm not saying Tesla has been on a massive bull market, because that's been quite volatile recently, and IBM shares collapsed recently as well, but the volatility is so good, okay? And as a trader and as a day trader especially, you need the markets to move. 10 points for me on the euro, it's not going to cut it. I want the market to move 100 points, okay? And you get that opportunity, and all these stocks plus a load more can give you those opportunities. But these are big stocks, these are big markets. And there's the price of IBM, as I'm doing this training and recording. IBM for the last week or so has just completely collapsed, all right? But with that, you've got stocks like the small cap market, which is capitalization between 300 million and 2 billion. And Wolf Speed here was a trade that we took, which went from $30 to $140 as a day trade. And then you got Redwire here, that went from $4 to 26. So it's not a 10-point move, is it? They're moving several hundreds of points here. And as a trader from the UK, you certainly can take advantage from that. And inside the stock index, you've got all these different, inside the index, you've got all these different stocks that make up a certain percentage of that index. And there's just so many opportunities to trade. And whether you're trading large cap stocks or small cap stocks, and small caps, I feel, can give you much better returns as a day trader. And they're cheaper to trade, and we'll go through an example of that soon. Okay, how cheap and how the returns can be much greater with the smaller caps or the smaller price markets. And it's up to you anyway what you want to be doing or what you want to trade. So let's just go through some basics. $20 to $40, a $20 move, of course, price movement. A $1 to $50 is a $49 move. And $100 to $280 is a $180 move here. Now, you've got to then multiply that dollar run by your position size, which gives you your profit, all right? So in the UK, when I first started trading, the pre-market would be at 1 p.m. London time, all right? And now it's 9 a.m. pre-market. 9 a.m. in the morning, we can start trading US shares. Now, it's early, it's really early, but I'm just looking at my scanner on my mobile phone, and there's about 8 stocks that have come out with some news today. In fact, even more now as I update the list. And there's about 8 stocks that have come out with news, and it's 10 o'clock time I'm recording this in the morning, and so there's opportunities straight out the gate. Of course, if you're working full time, then and you start at 9 o'clock, then it's going to be a bit of a struggle. If you've got time on your hands, you could start trading from 9 a.m. A lot of those stocks, though, they might have come out with news. They're all priced around the 50 cents to $3 at the moment. So, there are opportunities if you want to take that up. So, so 9 a.m. is pre-market open all the way up to 2:30. Now, of course, as I said, I used to come back at 1 p.m. London time, get ready for pre-market, look at the stocks gapping up, and I would literally trade on the news back in 2004, 2000 up to 2006 and beyond. And then all of a sudden we can get pre-market 9 a.m. Will it become 24 hours? It may well do. And then the US stock markets, the cash sessions open as you would know it. If you're a beginner, you're looking at the NASDAQ, the Dow, all the S&P, the Russell, they're all opening up at 2:30 London time. And they trade all the way through to 9 p.m. when they close, okay? So 9 a.m. to 9 p.m., it's a hell of a long time to be trading the markets. If I was going to suggest a time to start, I'd start at 11 a.m. in the morning. 9 a.m., a lot of the markets, not much volume going on, but you do get some trades, guys, But if you had to, pin yourself down, what time would be a good time to probably start trading? And I would say, more than likely, 11 a.m. in the morning would be a good time to start trading US shares, all right? So let's take a little look at the brokers in here. What's your options? And as I said, there's so many different options these days. More brokers allowing us to trade US shares. More of the brokers putting more stocks in their platform to trade, which is great. And they're very, very much seeing it as a really hot market. And the 2 brokers that I use, okay, for trading, we talk about trading here, is Capital Markets Elite Group, which has been an absolute fantastic addition to the broker options here in the UK, and the good old-fashioned, not old-fashioned because they've rebranded recently, IG Index, the spread betting broker. So we're going to look at capital markets first. I mean, I'm sure there's going to be lots of options out there, guys, but these are the 2 that I use, and they do the job for me, all right? So capital markets, in the old days, I'd have to send $25,000 to cover the PDT rule in the US, where I could only trade with a minimum of $25,000 plus in a trading account. So I'd have to send my money over, fill out loads and loads of forms, and when I take the profits, got to send it all back, and it was a little bit harder work. These days, I can get the same service from a London based broker. The head office is not in London, but they got London Bank, they've got a London office here. I can trade all the US shares that I want to trade with this broker, okay? And it's not what we, you might know as a spread betting account. It's not that. I am trading the shares in the exchange, all right? So let's have a little look at this. And they got loads of offers on. By the time I'm doing this recording for you, this lesson for you, they had 0 commissions. And look, I've got a link down in the I've got a link down in the comments, guys. If you click on that link, you get 0 commissions for a period of time as well, and some other little 0 fees, ECN fees as well. But I can just stick £200 in this trading account, and I could start trading literally tomorrow with it. I don't have to send any money to the US to trade the markets. And Capital Markets Elite Group allows me to do that, and it's brilliant. And I can start trading some small cap shares and take advantage of the volatility. They are FCA regulated, and so they are an option. And their platform's okay. It takes a little bit of time to get used to it. This is a shot from their website. But get yourself a demo, try a demo, and get used to it. But there's some really good news about this broker, which I've really welcomed recently, and that is that they're going to be integrated inside TradingView charts, which is when we talk about the chart section, we can go into that. I'll show you a little bit more about TradingView. Okay, so now I can trade directly into the charts instead of through the platform. And if you look at a stock called Ruby, which I was trading the other day, it went from $2.50 to $3.50. All right, so what would the pricing look like if I was trading it through Capital Markets, the stock Ruby? So the buy price on Thursday was $2.50. Now, if you buy 1,000 shares, your total position is 2,500. So priced at $2.50, multiply that by 1,000, your position size is $2,500. Now, the broker gives you what we call leverage. You're borrowing money to trade throughout the day. Okay, they just give you 4 times your account size, or they give you 4 times, guys, position size. And what I basically mean by that is that you only need $625 in your account. Okay, so 2,500 divided that by 4, you got $6,625 in pounds. You need around £465, give and take the exchange rate. All right, so that is the day trading margin requirement for opening this trade. All I need is $625 to do 1,000 shares, and that's a pretty big position if you're new to trading and just starting out. All right, obviously if you want 100 shares, then this is you need less money in the account. Now, as soon as I close that trade down during the day, because I'm a day trader, I'm day trading, as soon as I close that trade down, the trade gets realized as a profit or a loss, and then I'm back to 0 with that position. Okay, and then when I open another trade, they'll give me 4-to-1 leverage on that trade, and I need to put up a small amount. Now, if the trade moves on and makes some money here, so if it goes from $2.50 to $3.50 in 20 minutes like it did, that's a dollar run. Okay, that's a dollar move. And so a dollar move, multiply that by your position size, let's say 1,000 shares, you've made $1,000 on that trade, less your commission charges and any other charges. But then that works out £744 profit, okay, with the exchange rate. So if you're putting up £465 and then getting back £744 profit, that's a bloody good deal, isn't it? That is a pretty good thing to do. And look at the price of it. It's only priced at $2.50. You could be trading $1.50 stocks, $1.50, a dollar stock, a $5 stock. It's well within your capabilities to do this. Now, there's 2 types of way of placing a trade here. There's 2 sections to the order area in capital markets. On the left-hand side it says level 1. All that does is gives you a buy and a sell button. Okay, so level 1, all I can see is the buy at $3.38 and the sell at $3.37. And you put your share price in and you go, boom, buy, I'm in at $3.38 multiplied by your position size. That's great, okay? On the right-hand side here, it's called level 2. And what level 2 does, it gives you the depth of the market. And on the left-hand side, there's all orders. There's 180 shares here at $3.34 to buy on the bid. And over here on the right, you've got people selling or traders selling in the exchange here. So you can see the underlying depth of the market in this stock at that particular time. And it gives you a great view of what's going on, because let's say, and I don't want to get too advanced here, but let's say at $3.42, there was 3,000 shares to sell, 4,000, and that crept up. Well, that becomes like a ceiling there, because we've got to get buyers buying that, because there's loads of shares available at that price to be sold, okay, and it becomes like a bit of a brick wall. But what you've got to remember with a level 2, and capital markets give you level 2 as well, completely free, that it gives you market depth. You can see deeper. With level 1, you're just seeing the buy and the sell button, all right? So there is capital gains tax to be paid if you make a profit, but you do have an incredible allowance these days of £3,000, which, you know, has come down dramatically with the capital gains allowance, all right? So it's not like what we'd say a spread betting account. We're going to talk about that right now. The other option is IG Index, which is the broker that started spread betting in 1972, and they have most US shares to trade. They've got all the big, large stocks that you would think of, like the Teslas, the Metas, and so on, the Apples. But they've also got lots of small cap stocks as well. In fact, they've got the most small cap stocks. The frustrating thing for me is that sometimes I cannot open a trade with stocks that are gapping up with news, and I've got volume, and I'm looking to trade it, okay, and great, it comes up on my scanner on my phone. I go into IG to place the trade. It says, sorry, only closing trades with this stock. So my flexibility, my potential, my options with IG, in one way they're great because I get so many stocks to trade as a spread bet, but I get frustrated because I can't trade that stock with it being a small cap stock, okay, because it is what it is. But so what you've got to think about when it comes to spread betting and IG is that they are the broker with the most shares, okay, and that you'll get most opportunities trading smaller cap option, you know, with this spread betting company. All right, I've been with them for years, since I first started trading, really, and you know, I trade FX in there. I trade the morning move. I trade the morning move in Europe. I trade the morning move in the US. And you've got to think of it as in points, okay? Think in points, pounds per point. If you're not used to spread betting, we talk about points. You know, the stock Meta trade went up 100 points today. Apple went up 100 points. Well, we trade in pounds per point, being in the UK. So a pound a point, and it moves up 10 points, you make £10, all right? And it's all about your position sizing. It's not now shares. It's all about pounds per point. It's not 100 shares. It's not 200. It's not 1,000 shares. It's £1, £10, £20 per point, all right? As it moves, you make that amount of profit or loss. So same stock, looking at that Ruby stock, buy price on Thursday was $2.50. We're going to go long £10 per point, all right, 1,000 shares. Position size is the same, $2,500. Broker gives you 20% leverage, all right, you're borrowing money. Around £500 needed in your account, give and take. I know there's going to be people who say, yeah, but it's not that amount, it's not this exchange, it's around this, right? £371 needed to open the trade, and so on, okay? And then when it moves, you know, it goes a dollar, it makes 100 points. So a dollar is a 100-point move at £10 a point. Your position size, you made £1,000 profit on that trade. Now with spread betting, costs are built in for day trades. They charge you the spread. So if the price was $2.50 to buy, they might increase the spread to $2.55, okay, to buy, and $2.45 to sell. So they charge you that spread betting. And what they do is they take that, and that's their price, and that's what we've got to pay. Okay, I don't mind doing it. I don't want to pay wide spreads for stocks. If a stock is not traded very much, it could get quite volatile to move that stock around. The spreads would be quite wider, might be wider. But guys, over the last 15 years, the spreads in these brokerages have come right down and are becoming very competitive indeed. All right, so I'm sure there's lots of spread betting brokers out there. Trade Nation's another option. They're a good broker, solid broker with tight spreads. They got less US shares, but they've got a great amount of US shares. All right, so if you hold trades overnight with a spread betting broker, there is a charge for overnight fees. If you don't, just day trade, this is a day trading lesson, then you're going to close your trade down during the day, all right, before you go to bed at night. So there's just loads. This is inside the platform. I didn't have enough room on this slide to literally put all my all the stocks. There's just hundreds of them in there, all right? And you can see here this IG index, the deal ticket. This is called a deal ticket. The buy on the right, the sell on the left. The spread's 37 points on this stock. I can't remember it. It might be Meta. I put an example in, and then you put your position size at £1 a point, and then your margin requirement for this. My margin was 1,136. I have a pro account with IG Index, which allows me greater leverage and certain things that I can do and allow myself to rack up the position size with less margin requirements. As retail traders, you'll see this margin requirement pretty high up, and this is why it's a big old stock, $408, $407. It's a huge price stock, guys. As day traders, do you really want to be trading these big stocks like this? Okay, let's have a chat about the options in charting. Now, charting for me, I'm a technical analyst. That's what I'm trained in. I make decisions from a chart. I'm not a fundamental trader. I look at a chart and I make decisions. Now, trading is the footprint of sentiment. It tells you if there's more buyers coming in or more sellers, because it will be making higher highs and higher lows. Now, you're going to need a chart platform, okay, to make those decisions. TradingView is by far the most popular, okay? I pay for the US stock market bundle to be able to trade US shares. I pay £11.94, all right? It costs me £72 a month. You can get it much cheaper. I've just not bothered to do the annual subscription here. I don't know why I should do, because it does save you an absolute fortune on TradingView. So you get the charts, and inside the charts, guys, you'll get the shell of the charts. You get everything inside the charts that it gives you, but you need to add US markets, all right? You need to add that data subscription from the exchange, all right? And you're getting a US stock market bundle. It might be a different price by the time you look at this, I don't know, but you've got to get that data, all right? And they charge for that data. So once that, it's not a lot, £12 a month, and away you go. The great thing now, being March 2026, capital markets now have got their price feed. They've got the data coming in from the exchanges into their platform, and then now straight into TradingView charts. So I can, instead of going, remember that level 2 and level 1 thing on the left and right? I can now ignore that in a way, and I can literally go straight into the charts and place trades with this broker directly into the charts. So instead of faffing around, going onto another screen, I can literally just go in and click that position in the charts as it's setting up. Now, I am a technical analyst that likes to trade momentum, and this is sort of a simple wave structure here. The trends tend to go up in 5 waves. When you're looking at a price, whether it's a 5-minute time frame or a daily chart, price goes up in waves. Buyers come in, sellers come in, buyers take profits, and so on. If you're brand new to trading, really, you just think of it simply as an uptrend is higher highs and higher lows, swing highs, and a downtrend is swing lows and swing highs. Now, I trade with candlestick charts, and here's basic candlestick platform a demonstration here. You've got on the left-hand side is a bullish. Bullish mean going up, wants to go higher, been trending higher. The market is bullish, or this candlestick is bullish. Now, I like to think of a candlestick as sentiment. What's the sentiment? Who's won the battle of that candlestick? Because it's green, it's basically the bulls have won it, all right? And it has a high and it has a low. These are the wicks. On the right is a red one. So a red one here has a high and low. It's got a body inside here. And the sellers have won the battle of that candlestick. Now, these are the only candlesticks I really ever concentrate on, guys, as a trader. There's books, thousands and thousands of candlesticks with incredibly stupid names. But these are the 8 I just focus on, all right? And when I see any of these, then I like to pay attention as a trader, as a technical analyst. So as a day trader, and I'm day trading, I enter and exit trades before the day ends. I get high leverage and I can open trades with borrowing money from the broker in that short period during the day, all right? So if you look at a chart here, this is Tesla, and look at the price of Tesla, 405. We get a buy signal here. Look at the times down below. Remember we mentioned times around well, not around, at 2:30 London time, the market opens the cash sessions, and we get everybody who's day trading in the market at that particular time. Okay, you might get small cap stock traders that have done their day before 2:30, but the majority of volume comes in. But this is a big price stock. Can you afford to trade it in your account? Do you want to trade it? Is it going to give you really the big volume move that we crave as day traders? They're expensive to trade, and they don't really show big percentage gains compared to the other stocks, okay? So this is where the small caps come in. And you should think about it as a day trade. If you're starting out here, do you want to trade small cap stocks from $1 to $10? This is where I started. I did trade up to $35 and the $60 with Apple, but really it was always below $100. I was not really trading anything above $100, and it was that sweet spot. If I can get around $35 and so on, but now these small caps are running beautifully. You're getting some cracking moves on these small cap stocks. And now with the broker in play, Capital Markets Elite Group, you know, I can now just take advantage of these trades as well. And there's AGM. There's a few examples here. By the way, this is our pro trading system and tracks. You know, if you go to tradingcollege.co.uk, we use the color method. This is the software we developed back in 2007, 2008. And we've been using it ever since, okay? It's fantastic for day trading as well as swing trading. And we get buy signals here on AGM. It comes out with news. It goes from, what, $5.50 to $6.80. But look at the time here, guys. 10 minutes it takes to actually make that move. The euro dollar moved 10 points in like half an hour. All right? So, you know, it moves up. We get $1,880 on that trade. So a nice move in AGM. AGMH. You see the market depth here. This is the level 2 I managed to grab for you and put it over here. And this is, you know, all the orders in the book as well. But this is these 2 top prices you want to be taking a look at and keeping your eye on. And this is Zoos, a stock, ZOOZ, comes out with news. It's driven by news announcement. A lot of these small caps are, and it moves from around $2.40. It goes all the way up to like $7, $8, $9, $10 up here, nearly $10 anyway, that round number. And stocks are round numbers like $10, $8, $12 are big psychological areas for traders and stocks, no matter what market you're doing. If you're trading the FX market, gold market, or indices, round numbers are big psychological areas where price tends to stall around there. Or if they break out with huge volume. But the price is driven by the news. News comes out on Zoos, comes out in the morning, 9 a.m., and this thing just flies higher. If you can get on the back of those trades, fantastic. A lot of the time, you're going to probably miss the move because the news comes out so quick, and all the algorithms and traders dive into it, and you're scrambling to look at the chart to find it, and it's gone already. It's extended already, what we call it. It's overbought already. But you want to keep that in your watch list, okay? And here's another one, FGI. This one goes from $5 to $13 in 45 minutes. Imagine if you get good at this, if you practice the same colors, if you practice the same patterns, whatever your strategy is, every day, just imagine how good you will be at that. So this goes from, you know, up to $8 run here. and 1,000 shares, you've made $8,000 on that trade, guys. All right. Now, we have what we call pre-market. Remember, I spoke to you earlier about pre-market highs and lows. Well, you can see here, I put this sort of yellow, sort of like box type thing here, and you look at the time down below. It's 9 a.m. in the morning, and I've just moved it all the way across to the 2:30 open here, just in front here, so you can see it. And you see this pre-market price range. What tends to happen is, if a stock is going to run on the open, it tends to break the pre-market high. So you can look for a little breakout above the pre-market high for a move. And if you look at this, you probably look at this going, yeah, but it's not really moved very far, Lee, from $8 on this candlestick. Where's it gone to? Well, it's gone above $9. So if this is just what, let's call it $8.40, it's gone above $9 here. That's a 60-point move, guys. In spread betting terms, you're doing that with a pound a point, you've made £60. You start doing it with 1,000 shares, you made $600. What, £500, 450 quid or something like that? So, even though it doesn't look like it's moved far, it has. It's moved a good 60 cents here. All right, so these pre-market highs are really important because you often get breakouts from those areas. And this is trading view charts that are going to be linked up to capital markets. And IG Index have got trading view as well. On the phone, this is the mobile phone, trading Vanda Pharmaceuticals. It moves from $8, it was trading at $8.24 when I managed to snag this and emailed it to myself. And I'm on my phone. So you could be, I wouldn't advise, I'm not advising you to do anything, but I wouldn't suggest that you trade these small cap stocks on your phone while you're going for a walk or at work, because they move extremely quick. And as well as they can go up $1, they can drop $1 very quickly. And if you're scrambling on your phone, you lost your phone connection, then that is not really good. But look, if you're in a trade that with a stop loss, remember what a stop loss is. A stop loss is an order to get you out the trade when it goes against you, but it's also used to lock in profits as well. As the trade continues to go higher and higher and higher, then you can move your stop from underneath, which is here. So let's say you enter here, your stop is here. If it goes wrong, it's going to stop you out. But as it starts to go up, you cancel this and you can drag it with your little thumb and you can drag it up above your entry. Okay, so you could be on your phone as I'm doing this demonstration. You probably can't see me on my phone here. I'm just dragging my, stop loss order up with my thumb and then lock in the profits. Okay, you got to practice with that, of course. Now, the key for any trader, believe me, guys, in the first 18 months, when I started in 2004, I lost £44,000, British hard-earned pounds, by not respecting this slide. Your aim as a trader is to have big winning trades, as many as you possibly can, and have a trade that runs as far as it possibly can by managing the risk and having small losing trades. All right, look, you're not going to be the Wolf of Wall Street. You just need to have some really good winning trades, and that's where the day trading side comes in. The day trading, these small caps can really run, and the big caps can run as well, guys. Look at IBM share price collapsing the other day. If you were on that on a trade, then you'd have made a substantial return. But your risk has to be really small with these trades. That's why you've got to be so careful trading it on your mobile phone, making sure, because anything happens, then you could take a big loss, and you don't want to be doing that. Get out of losing trades really quickly, let the profits run. All right, that's the key. Now, you're going to need a scanner, screener, whatever you want to call it. It's the same thing. We're looking for trades to take. We're looking to find opportunities. And I used to use trade station charts back in the old days. Those trade station charts are fantastic. They would allow me to scan the markets for hot stocks setting up pre-market. Remember when it was 1 p.m. pre-market before? And you can run these scanners and you can find stocks that have got news that are going on a run. And you could literally, the software will do the work for you. And so we use our own scanner here at Trading College. We can find these hot stocks that are setting up, going on moves, turning green, for the long side and the short side as well. All right, but you can also use things like TradingView. TradingView is the chart package they've got. If you type in on TradingView, you can see, just type in pre-market gap scanner screener, and it'll come up with this. And you can see here it gives you a list. YBO. It's got some volume. Pre-market volume is 6 million shares, and you might want to trade this. It's got pre-market gap and so on. You can use this scanner to find markets. They've got loads of scanners in here. One thing for sure, don't get bogged down by all these scanners, guys. Just look for your pre-market one if you're day trading. You might want to look at, I don't know, biggest gainers as well throughout the day and biggest losers, because they could give you opportunities. So that's built into TradingView charts. And then you could link that scanner to the chart. So over here on the right-hand side, I could just click. I could click one of these symbols here, these stock symbols, okay, these stock codes, and it would change the chart for me. And this IBRX, you see, I can just, it's right at the top here, and it's moved up. It's moved from $8.80 all the way up to nearly $11. All right, a good, nice green buy signals. But small cap stocks can be highly volatile, offering the potential for significant profits and rapid growth of a trading account in an exceptional short time. However, this volatility also brings substantial risk, as these stocks can plummet just as quickly as they rise. So exercise caution, guys, at all time. Use a stop loss, get out the trade. VNDA, I don't even know what the company does. I'd have to look up the news about it after the event, or at the time that it fires that news announcement, and then we get a buy signal. This was a hot stock for the session. 2:30, we were red and going down. Sellers were in control in the system. We turn back to green. We push up 70 cents. We exit on the red, okay? That's a 70-cent move. At 1,000 shares, you've made $700 in that period of time. This was GCL, 121% move. And look, not all trade, you're going to get stopped out of trades. Not all trades as a day trader, when you're trading US shares, are you going to have these incredible 100% moves. But if there's opportunity, it's inside these stocks. But you can also short the markets as well. Here's a stock called Comp, sold off really hard the last several sessions. And the issue with this, with some brokers, is that you might not be able to short this market. They haven't got the shares to short this market. And sometimes that is also a bit of a struggle as well. You've got a small cap stock and you're looking to short it, and it's what we call hard to borrow. I cannot short that market. But most of the time you're going long these markets. So the daily process is run the scanner, find what's hot as a day trader, wait for the buy signal, manage the trade and exit. You're going for your day's money. You're going for your dollar run. And look, if you can make $500 a day to start with, $200 a day, and get good at that, then that is a good income for you. And you'll just grow the account, and then you'll be able to do bigger position size as the account grows. Our pro trading system, this is a little punt for our trading system here, guys. If it's green, it's making those amounts of dollar runs. If it's red, it's losing. You can see here when I snagged this is just a few of the NASDAQ stocks. I couldn't get past F down here on this slide, but look how green it is. The system and the colors are absolutely fantastic. You're probably wondering if you could be any good at trading, and the answer is of course you can. If another human being's done it and been successful, you can do the same thing. Now, this came from a book that I've also mentioned this on another YouTube video. It's called The Habit Line. And what you need to do is get above the habit line. If you can get above the habit line as a trader, then this becomes second nature to you. All right, so the first thing you need to do is put some effort in to learn how to trade the markets as a day trader. And then when you get the reps in, i.e. the trades, it gets easier and easier and easier, because you make mistakes, you do good things, you learn from it. And as you get above the habit line here, it becomes second nature. And as I said to my kids, if you want to be good at anything, practice, 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 practice. All right. Now, the thing is, you can practice in TradingView, and you can practice in other chart platforms that have what we call a replay. So I can go back to the trade-in session today after it's happened, and I could say, Okay, let's replay what happened. Start at this time and replay the signals. And then I could buy and sell in a demo account and practice and see. And this is what I do for students. I get them practicing. Because if you get the reps in, the trades, you get lots and lots and lots of reps in, lots of trades in, guys, then you'll get good at it than somebody who doesn't practice. All right? So practice is key. Get good at practicing. It takes effort, and some people don't want to put their effort in, but I'm sure you will. And if you practice, and what I like to do is see how much I made that day on the session, and then go back and just see what I could have done. Could I have made it even better, or could I have, would it have been worse? I mean, how, did I do well today? Did I follow the strategy today to the best of my ability? Was my entry good? Now, bear in mind, when you're running replays, it doesn't take into, you can put in your commission and your charges and your spread and things like that to make it really realistic for you. But I would highly suggest that you all practice if you're a beginner learning to day trade. And don't forget, guys, small risk, big profits. And you get that in US shares. You get that in the US market. Big profits, small risk. And if you do that and you practice and you've got a good trading strategy, then you could do really well out of this. That's why I always, talk to our students about trading in colors. This is what I developed years and years ago. By the way, guys, down in the description, I've put some links to the brokers, okay? And if you want to dive in there, open a demo account with them, take a little look, especially with capital markets. If you're somebody learning, you want to trade the markets, I would highly suggest you open a spread betting account with IG as well, because that gives you the tax-free option. If you make a profit, you do not have to pay tax on that, but please get financial advice. All right, so click in the link down below in the description. Come and join us here at Trading College. Come and have a look at what we do with the colors, guys. The color system and the method literally has been award winning for the last 3 years. Okay, this was last year, 2025's awards: best trading system at the London Traders Show, best customer service, and best mentorship program. I thought I'd get that plug in before I disappear. Don't forget to share the video with anyone who's looking to learn to trade US shares or US indices from the UK and they're just starting out. This might give them a bit of help and direction. And also like the video as well, guys, and put a comment in down below. All right, hope it helps. Hope the education's helped you. Hope it's given you a bit of direction, but I try to keep it as short as possible. It's gone for 42 minutes, and I'll speak to you soon, guys. Have a great rest of the day.